Hey, it's Melissa. Here's my $100,000 stock experiment for 2023, week 8. This is my video diary sharing my stock journey. Help me celebrate my successes and learn from my mistakes as I try to implement the CanSlim trading methodology developed by William O'Neill. I'm trading in my own retirement account on real money. I don't have any tax implications on my trades to consider. Please don't consider this an endorsement to purchase any stocks that I've bought or to purchase stocks in general. You need to do your own trading decisions. According to the IBD at investors.com, the market is in uptrend under pressure. The tracking of new highs versus new lows is showing that we have more new lows. This is the first time in 2023 that we've been in the red. And according to the Steve Sweat's window of opportunity, it's closed now. Everyone has different ways of looking at the market and seeing if they think that it's a good time to buy stocks or not, or maybe some people don't look at all. But Steve does, and he tracks his information here in this window of opportunity spreadsheet. And you can see the last entry down there in the bottom from February 24th. The Woo signal on the right-hand side has gone into correction. The S&P 500 index is down 2.7% for the week, and it's below my yellow line in the sand at 4,080. It also closed below the 50-day simple moving average, that red diagonal line. It closed the week right around 3,970. Last week I was thinking we were in a period of consolidation and stocks were going to be going sideways. I put this orange box around the area where I thought was the consolidation, and I warned that if it fell below, that was not a good sign. If it went above, that was a good sign. Well, the S&P 500 index went below, and it did close right around that 50-day simple moving average. Like I said, that red diagonal line. Not a good sign. The NASDAQ was also down for a week, 3.3%, and it closed below my yellow line in the sand on this one as well, at 11,500. It did close right around the white and orange lines, the 150 and 200-day simple moving average. This index closed the week just outside my orange box. It was just below the low of the week from 2/3 by about $4. Not surprising, a bunch of my stocks sold with the market going down. Lam Research stock symbol LRCX. This one's technically not out of my orange box on this weekly 1-year chart. The low on Friday was 4 cents above the low from 2/3. Lam Research hit my floor and triggered a sell on February 21st. I took a 3% loss in this stock and I had held it for 3 weeks. CBAY Therapeutics stock symbol CBAY. This one definitely went outside the box and then it closed within the box range, but it's not a good sign that it took that big dip and it kicked me out. I had 2 buys in CBAY. My B1 I held for 4.6 weeks, so 4 weeks and 3 days, and it was down 4.1% loss. And my B2 I held for 3 weeks and 4 days, and it was down 4.3%. I also sold my Apple stock, all 3 buys, but I took profits in these, so that's nice. My B1 I held for 6 weeks, and I took a 4% gain. My B2 I held for 5 weeks and a day, and I took an 8.7% gain. And my B3 I held for 4 weeks and I took a 7% gain. And Apple also went outside the area that I had marked for consolidation. I'm down to holding just 2 stocks. United Rentals, stock symbol URI. I have 2 buys in United Rentals. My B1 I've held for 7 weeks and 1 day and I'm up 20.7%. And my B2 I've held just the 7 weeks and I'm up 17.7%. I did leave my floor where it was last week, and I need to decide if I'm going to sell this and take my 20 to 25% profit in the 8-week time frame, or if I'm going to hold it longer. NVDA Corp, stock symbol NVDA. I used to have 3 buys in NVIDIA, but my B3 sold this week. I held it for 6 weeks and I had a 25% gain. It dipped to my floor before earnings, and then after earnings it went up like 10%. So it would have been better if I held it, but I'm happy to get out with a 25% gain. I still have my B1 and my B2. My B1 I've held for 6 weeks and 4 days and I'm up 48.3%. Yay! And my B2 I've held for 6 weeks and 2 days, and I'm up 44.7%. I did raise my floor for my B1 up to the 31-day exponential moving average, that diagonal light blue line. And for my B2, I moved it up to the diagonal green line, that 16-day simple moving average. My current holding bar chart has one bar for each week or portion of a week that I've held the stock. NVIDIA's in the blue over on the left-hand side, and United Rentals is on the right-hand side. You can see NVIDIA went right past my target profit goal of 12,500, and URI is just about there. I look at my weekly percentage change and sort it by the lowest value on the top. So NASDAQ was the big loser this week, with down 3.3%, followed by S&P 500 down 2.7%. United Rentals was down 2.4%, and NVIDIA ended the week up 8.9%. I'm most heavily weighted in cash right now, 68,000 in cash. I have about 23,000 in NVIDIA and about 19,000 in United Rentals. I've been doing my experiment for 8 weeks. The S&P is up year to date 3.4%, with a weekly change this week down 2.7%. The NASDAQ has a year-to-date gain of 8.9%, with this weekly change of 3.3% down. And the Melissa method, I only lost 0.5% this week, even though I sold a bunch of my stocks. I sold them before they fell further. My year-to-date is 10.8%, and I have about 42,571 in stocks, 38% invested. So after 8 weeks, the Melissa method is at 110,838, followed by the NASDAQ in the light blue, 108,871, and down on the bottom in the dark blue is the S&P 500 at 103,400. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.